Hi there, welcome to Market Call. I'm Paul Bagnall. Thank you so much for being along. This is my last show on BNN Bloomberg. Lyle Stein is on the show today. He's president of Forvest Global Wealth Management. He'll take your questions on North American stocks and global stocks. You know the drill. Pick up your phone right now and call us at 1-855-326-6266. You can also email us right now at marketcall@bnnbloomberg.ca. Lyle, thanks for coming in.
Good to be here, Paul.
We'll talk about other things later, but let's stick to what we do best and talk about the markets right now. Yeah. You make the point that what the market wants to see is lower interest rates and higher, stronger earnings growth. We're getting one of those things, the market believes, lower rates. How important are these second quarter earnings that are coming out right now?
I think they're fascinating. I mean, you look at some of the reports that have come out from an analyst perspective, they've been good, but the stocks aren't necessarily behaving as if they're what they expected. And so are earnings going to continue the upward momentum? We've already seen Q2 numbers almost halved in terms of growth from where they were at the beginning of the quarter. And now the question is, what will 2025, but more importantly, 2026 look like? We've had a little bit more clarity on tariffs, but the clouds haven't cleared yet. We don't know what those numbers are going to be, and either do the companies. And so what we're watching for is the indications that the companies are giving us with respect to how they are dealing with the tariffs that they think are coming down the road. That's where, to me, the most important numbers are going to be.
We didn't get a lot of clarity in Q1. In fact, a lot of companies said, we're not issuing guidance because things are so confused. Are you hoping for more clarity this time around?
Yeah, we spend a lot of time talking to companies, and what we're hearing is that there is a better sense of the liberation tariffs, those painful original tariffs not being there. They've had a better chance to respond in terms of diversifying supply chains as well as adjusting their prices. But that takes time. You know, the market wants to have it all like this, and it takes time for companies to change a price stack or to change suppliers.
The U.S. dollar, the decline in the U.S. dollar, what does that mean to investing in the U.S.? Many of our viewers are substantially invested there, and that's been a winning trade over the years. What's your thought on this thesis that the appeal of U.S. stocks may be fading?
It's a general, I would say, discomfort with the U.S. It has been king. It has been the king dollar. You know, the U.S. market hit 75% of global markets. You know, everybody talks about our wonderful NVIDIA. Well, NVIDIA is bigger than most markets around the world, with the exception of Japan. Yeah. If the bloom comes off the rose, the money will rotate. And so it's not that the U.S. is going to be abandoned in total, but the money will have to go somewhere. And if it wants to go to equities, it will do what it's been doing, which is going to Europe on one side of the pond and Japan on the other. So the notion of the U.S. being the only place to be is falling off.
That's Lyle Stein. Those are his thoughts on the market. We'll be back with Lyle after this. He'll start taking your questions on North American and global stocks. We'll show you that phone number and email again. It is 1-855-326-6266, and the email address is marketcall@bnnbloomberg.ca. We'll see you right after a very short break. Okay, let's get the questions going to Lyle Stein. He's the guest on Market Call today. Our viewer Ken has sent us an email message. Ken writes as follows: how do you see Sprott Incorporated to protect purchasing power in the coming months and years? So our viewer, not our guest, our viewer is interested in Sprott Incorporated.
Ken, you nailed it. That's exactly why we own Sprott in our portfolios. It is a diversifier. We've been major proponents of gold as a way to protect yourself as an investor from inflation as well as geopolitical concerns. Sprott brings us leverage to gold because of the gold funds that they run and the gold assets they manage. It also brings us uranium. And we bought it, a while back. Actually, I'm going to fess up, we sold some just last week to take a little profits. It's had an unbelievable run, but it still consists, or it makes up about 4% of our portfolios for exactly the reasons you're talking about. We see the dividends going up. We like the fact that we're levered to rising commodity prices. and we don't see gold falling, we don't see uranium falling, so we just think it's a great place to park your money.
The pattern of the stock is remarkable. It drifted sideways for the longest time, and then, like most stocks in the market, most large caps, took off in April. That's interesting because the price of gold has been rising for a couple of years. Any thoughts on the trading pattern of the stock?
Well, I think two things have happened. When we really got interested in Sprott, it was after the acquisition of Westinghouse, the deal they did with Brookfield. That, to us, is a perfect play on the theme of energy. The world is moving away from traditional coal. It's going to natural gas. That's our biggest thesis, but it's going to wind up somewhere in the nuclear camp. And so we have access. But with Westinghouse, we have an access to what we like to call the bullet manufacturer. You don't necessarily want to own the armies in a war,
right,
but you want to own the people that are making the bullets. And Westinghouse is a dominant player in the Western world when it comes to uranium facilities. So to us, it was a natural, and here we are.
Okay, great question.
I mean, that fits into Cameco, and that's the uranium story.
Right.
But I mean, that's exactly why you want to own Sprott in their uranium side of things.
Okay, great question from our first viewer. Great answer from Lyle as well on Sprott. Let's go to the first caller in this program. John is in London, Ontario. John, thanks very much for your call. What's your question to Lyle Stein?
Thank you, Paul Bagnall. What an outpouring of affection and gratitude. Godspeed to you, Paul, and enjoy your retirement.
Thank you so much.
Hello, Lyle. My question is about investor psychology with respect to the stock Netflix. When Netflix reported, and revenue beat and earnings beat, and they raised their guidance. In the old days, that would mean the stock would go up 95% of the time. But now I see stocks going down and down substantially. Is this, number one, increased investor sophistication reading between the reports? Number two, the effect of macroeconomic factors such as tariffs and instability geographically? Or three, some unknown factor. Thanks very much for your help.
Thank you, John.
John, that's a great call. And in fact, we touched on that in the opening segment of the show, and I was thinking specifically about Netflix in the context of a stock that had great numbers, did everything right, and today it's down 4%. What is going on there? Well, expectations have been set very, very high for the traditional growthy names, for the earnings momentum games. And if everybody owns a stock, what's your next move? And I think this is one of those stocks, and there's a bunch of Mag 7 names that would also fit into this. If everybody owns it, at the margin, what's the next investor going to do? And I think we're seeing that in Netflix. Someone out there didn't like what they saw. And so they're at the sell button today, selling. And I mean, I hate to say it, that's the psychology question that you asked.
That's a great question and another great answer from Lyle. Thanks. On Netflix, one of the big stocks in the move today. The company has topped expectations across the board. The stock down about 5%. Tim is in Montreal. Tim, thank you for your call. What's your question to Lyle Stein?
I'd like Lyle's opinion on Chevron, please. Thank you.
Chevron is a name we don't own. When we're looking at oil and gas stocks, we'll stay home for that. We think that the dividends that are coming from the oil and gas patch, particularly in Canada where they're tax effective, we can't find better places to be. Chevron being one of the internationals, right up there with Exxon, you're buying the world, you're buying the oil price. And we're not as much believers in the oil price as we are in the gas price. Our portfolio today consists of 3 gas producers and 1 oil stock, Imperial. All those are paying nice dividends. And we really believe that the Canadian oil patch has been underappreciated for years. And so we're getting them cheaper than buying international oil assets. So we don't own it. I mean, it's a great big cap name, but we'd rather stay at home with the names we have in Canada.
Okay, thanks, Tim, for your question. We will be back with Lyle Stein of Forvest Global Wealth Management right after this. He'll resume taking your questions on North American stocks and global stocks. Okay, we are back with Market Call. Lyle Stein's our guest, and Anita from Markham, one of our very regular callers, is on the line right now. Anita, I'm glad you called in. What's your question to Lyle Stein?
Good afternoon. Thank you for taking my call. And Paul, wish you all the best in your retirement.
Thank you.
You're going to leave behind a void that's going to be tough to fill, I suppose.
Thank you so much. Thank you so much.
Anyway, my call is on TC, Stryker. Could I please have your lines opening on this company, please? Does it have growth? I've done quite well so far. Should I hang on to it, or should I sell and buy something else and take the profit? I'll hang up and listen to you. Thank you.
Thank you so much, Anita. Stryker, the medical products company.
Anita, you're looking at a potential customer of Stryker. I've been told I might have to get a new knee, and so you're playing right into the aging theme. You're playing right into a theme where these knee replacements, hip replacements, the Stryker sweet spot is only going to get better. The stock has done very well, as this chart shows. We don't own it. But it's a name I've continued to look at, and I'm looking at it even more closely as I stare down every morning at my knee. But it's a great name, and it does play, I think, this aging theme very, very well. It's a name, like I said, it's one we're looking at, just haven't bought it. Okay. I would hold it.
Lyle Stein would hold it. I'm going to get you, Anita, the consensus of analysts who follow this stock. 24 say buy, 7 say hold. So this Wall Street is decisively in the buy camp. Lyle Stein, by the way, plays soccer once a week. That may be the source of his knee issues, but we'll leave that discussion for another time. Mike in Toronto is up next. Mike, thanks a lot for your call.
Thanks for taking my call. Paul, I'm a long-time viewer, first-time caller. I think I started watching the show back when you had hair, from what I remember.
Yeah, that was a while ago. That was about 12 years ago.
Yeah. So, good luck with retirement. You're a great guy.
Thanks very much,
Lyle. I was downtown Toronto last night, and I ran into a group of about 8 traders. And I asked them, what's the trade of the month? And they said it's to short Goldman Sachs. But they didn't want to get into the reasons why, because I guess it's kind of complicated. But they said it's probably the trade of the year. And it's got a short-term expiry date to get it set up by the 23rd. So my question is, what do you think the rationale is for doing this? Thanks.
Oh boy, I'm not a good trader. You know, my line on Goldman Sachs, I've maintained this forever. As Paul mentioned, I play a little soccer, and there was an old adage about it takes 11 people to play soccer, and at the end the Germans win. Well, there's always bull markets, there's always bear markets, and at the end Goldman wins. And we've seen that this quarter with respect to their trading profits. So all I can say, and you can look at the stock price chart. Again, we're investors, not necessarily traders. This has been a great way to play capital markets forever. And the question is, where are capital markets going to go? It was a great trading environment. We had a 10, 12% decline in the market. It rallied. Everybody wants to trade in that kind of environment. Goldman is a winner. We saw the results from JP Morgan. All the capital markets have basically done well. It's a capital markets game. So, we don't own it. It's a name I always look at. I remember when they did an IPO, and we bought the IPO. But I just wish I could comment on trading. I just don't have a view there.
Right. What I can tell you, Mike, and this also doesn't play directly to the idea of short-term trading, but the analyst consensus breaks down as follows: 12 buys and 13 holds. So Wall Street is a bit divided as to whether the stock is fully valued or not. And then there are 2 sells. So of all the analysts who cover Goldman Sachs, and there are 27 of them, only 2 say sell. Now, they're not advocating short-term shorting. They also, all these analysts are catering to the interests of longer-term investors who are going to hold for 12 to 18 months. Of that 27, only 2 say sell Goldman Sachs stock. Thanks, Mike, for your call. Rob is in Calgary, and Rob, you're on the air with Lyle Stein. Thanks very much.
Hi, thanks for taking my call. I'm happy I was able to make it through on such a momentous occasion. So first, Paul, I'd like to wish you congratulations on your retirement. You've had an exemplary career in business news, broadcasting, and journalism, and you will be missed.
Thank you very much.
So, you're welcome. So, Lyle, I'd like to hear your opinion on Pfizer. I'd held the stock for a while now and ridden it down from its COVID highs, and it looks like it's tested a bottom. What would you do, Lyle, at this point? Buy, sell, or hold? Thanks again, and have a good weekend and good retirement, Paul.
Thank you so much, Rob.
Rob, it's interesting you say that. I think Pfizer is worth taking a good, hard look at. First of all, it's got a phenomenal yield. We like yield. We like a good, I think Pfizer's yield is 6% in that kind of range. Total return on the market over the next 5 years is probably going to be 8 to 10%. So if I can get the bird in the hand, I'll take it. Second, as you said, the stock, and you look at the chart, is starting to form a bit of a bottom. It's got a low PE, and they've got some things in the pipeline that I don't think the market is paying for. So when you put that all together, if you're a longer-term investor, Pfizer's well worth sitting on, getting rewarded while you wait, and then should the drugs come through as hoped, you'll get a nice upside pop. So it's a name that looking at closely.
Okay. Thanks a lot for that question on Pfizer and your kind words, Rob, from Calgary. When we come back, Lyle Stein's past picks. Welcome back. It's time now to take a look at Lyle Stein's past picks. So we'll travel back in time to the day of February 7th this year. So not too long ago, but 5 months ago, February 7th, 2025. On that day, Cameco was one of Lyle's top picks. CCO, of course, the world's largest, certainly Western country uranium producer, of course. And in that short period of time, the total return on Cameco, 50%. Lyle?
Yeah, and we talked about that briefly in the context of Sprott. We're looking at uranium as the alternative energy play. Everybody, went to solar and they went to wind and all the rest. Well, we see gas as the interim solution, ultimately to nuclear. Cameco was a cheaper stock back in February, and that Westinghouse acquisition, I think, sets them up really, really well for the future. Price of uranium's, I think, around $70. It fluctuates a lot. They're getting that price. There is interesting things developing in the world. Who knows what's going to happen with Russia, which is the other alternative to Western uranium. We just think Cameco is a great name to own in the theme. And like Sprott, it's one of the largest holdings in our firm.
Would you buy it now? What would you say if an investor asked, should I buy now?
We've owned it. We own a lot of it. To us, it's a hold. Unlike Sprott, we haven't trimmed it because
right.
it hasn't gotten too big a percentage in our portfolio. But I think everybody should have 2 to 3% as a long-term investment. Okay.
AltaGas was also a top pick on that day, ticker symbol ALA on the Toronto Stock Exchange. AltaGas, the return of over the 5-month period, 19% over that period of time.
Yeah, and AltaGas plays right into that gas theme that we've talked about. It's at the end of the pipe. Yes, AltaGas ships liquids off the west coast of BC to China and to Japan. But to us, the exciting opportunity comes through their Washington Gas Light subsidiary, which ships natural gas to Loudoun County. Now, what the heck is Loudoun? Loudoun County holds 15% of the world's data centers, and they're building more and more, and you can't build them fast enough. AltaGas is getting calls day in and day out. Can you supply us? It has the growth engine from the data centers. It's got a great yield. It's got growth opportunities coming from those liquids that we export as well. It's just, to us, the best utility in North America to own.
AltaGas was a pick as well. That stock up 33%, very nearly, over the past 52 weeks. The next one's an interesting one. We often see television commercials about this. I notice them now in cottage country here in Ontario when I travel around. Generac is the maker of those generators intended to supply power when the power from the grid goes out. It's a publicly traded stock, GNRC, in New York, and the total return over about 5 months' time, 6%.
Yeah, it's a volatile name. Make no bones about it. But it's a long-term investment in the fact that the grid is collapsing. And, we have a wealthy society today. But actually, the biggest users are people my age who are on oxygen or who are on some sort of need for power all the time.
Right.
Generac supplies about 60-70% of the market in North America. It's a $4 billion company. If sales increase by 1%, penetration of 1%, $6 billion of sales to the company. It's got great growth. It trades at a less than market multiple. It's a simple company to understand, one of those great rules of investing. It's a no-brainer.
Generac is number 3. Those are Lyle Stein's past picks from a year ago, all of them in substantially positive territory, only 5 months. Cameco, AltaGas, and Generac. We will take a break and be back with Lyle right after this. He'll resume taking your questions on North American stocks and global stocks. Okay, let's keep the questions coming to Lyle Stein. Anne is in Scarborough, and she's our next caller. Anne, thanks for calling, and thanks for waiting on the line so we could get to you.
Let the chips fall where they may, but your thoughts on Intel going forward, please and thank you.
Thanks, Anne.
You know, Intel's an interesting name, and it's kind of the industrial products in the high-tech sector. You're looking at the manufacturing of chips. You're looking at a company that has struggled for a long time. They've had to change managements. They've had to, rearrange their whole strategies. It could be putting in a bottom. It's the play to be in. If we repatriate chips to North America, they will participate in it. But it's just been a struggle. And when you got names like NVIDIA running out there, it's kind of hard to say, well, I'm invested in Intel as my chip play. So again, it's a name we don't own. It's got a decent dividend, but you don't own chips for value. You own chips for growth.
Right.
There's better value names. There's better growth names. Why own Intel?
There have been execution missteps at this company for a while now, correct?
Correct. Yeah, they've missed. They've changed strategy. The strategy misses. It's been tough. They've had a tough time adjusting from sort of the PC world that they grew up in.
Right. I think you phrased it well, because a lot of people look at the stock at depressed levels and say, is there value here? And your answer is an interesting one. You don't look for value in the chip sector. You go elsewhere for that. Thanks for that question. Let's go to Francis in Mississauga. Francis, thank you for your call.
Hello, good afternoon. I have a question, but it's actually for Paul Bagnall. And I don't live in Mississauga. I live in Toronto.
Oh, I'm sorry.
And you might, in fact, recognize the voice. But my question for Paul on this last day, and I've always wanted to ask you, Paul, this. Sorry, Lyle. I don't have a question for you, but I find your Intel answer very interesting. But for Paul, what is your favorite all-time Bob Dylan song? I've meant to ask you this for 16 years.
That's Francis Horodelsky, a beloved figure in this station's past. Francis, it's wonderful to hear from you. My answer is Tangled Up in Blue, the epic love story from Bob Dylan's masterpiece in 1974, Blood on the Tracks. And he has, now we're getting into the weeds because you're a Dylan fan too, but he has performed that song so many different ways over the years. That's one reason I keep going. And one of the reasons you keep going, Francis Horodelsky, to Bob Dylan concerts. Francis, it's wonderful to hear from you. Thank you so much. A delightful surprise. Lyle's got something to say too.
So I've never asked a guest a question, Francis. How many shows have you been to statue of Bob Dylan.
I count in fives now because I long ago lost count. I think I'm about at 75 or so, and I've got 2 more coming in a couple of weeks. So I'll be crossing the 80 threshold before too long.
And Francis, how about you?
Paul, I've been like to 3.
Okay, all right.
I am not, and I'll never make 75 for sure. But I just wanted to mention and say on behalf of all former on-air and behind-the-scenes BNN people and current on-air and behind-the-scenes people, it's been an honor and a privilege to have worked with you. You taught me so much on my first few weeks at BNN way back in 2008. And as I said, it was a delight. I hope you have a great future, your next chapter. And as I said, I really enjoyed working with you all those years, as did everyone. And it's been a delight. Thank you.
Francis Hordelsky, thank you so much. What a wonderful surprise here in the middle of a market call. Thanks to Francis Hordelsky. They had her queued up in the prompter as Francis from Mississauga, who wanted to talk about Taiwan Semiconductor. Thanks, Francis, a great deal. Okay, back to business we go. Trevor is in Calgary. Trevor, what's your question to Lyle Stein? Okay, we may have lost him. We had a bit of a diversion there. We're going to go to John. Okay, we're going to John in Milford, Ontario. John, thank you very much for calling. Thank you very much for your patience as you waited on the line. What's your question to Lyle Stein?
Good day, gentlemen. My older brother is interested in Enbridge. I've owned it for a long time. I recommended it to him. What's your thoughts on the future of this company? Thank you very much. Bye.
Enbridge is a great income name, but it also fits in the theme we've talked about. So we've talked about gas in Alberta and gas in Canada and energy in Canada. We talked about AltaGas at the end of the pipe. You got to get it from Alberta to Loudoun County. You own Enbridge, you own TransCanada. Enbridge's got a 6% yield. They're growing that yield at the dividend at 2 to 3% a year. You're looking at 8-9% total return on a long-term basis. They've just improved their capital structure with the selling of the pipeline to the native band in BC. It's a great company. It's been well managed for 50, 60, 70 years now that they've been in operation. Again, that 6% dividend looks pretty darn good, and it's going to be growing along the way. It's a great hold. It's a great buy if you don't own it. Why sell it? Where are you going to find 6%?
That's his answer on Enbridge. Thanks a lot for the question from Milford, Ontario on Enbridge. Let's go to the email inbox for our viewer, Ian. Ian writes as follows. Can I please have your guest's opinion on Johnson & Johnson? I bought this stock 5 years ago. I wasn't expecting huge growth, but I've been underwhelmed with its performance. The stock has been trading sideways for ages over the talc lawsuit. That's a lawsuit over talcum powder, and had a nice pop on earnings. Should I sell on the news, or do you see more upside from here?
This is a tough one. You look at J&J, and it was about 3 years ago, 2.5 years ago, they spun out Kenvue, which were their consumer products division. And Kenvue is, in our nice part of space, everybody, takes Tylenol, and we use all their Neutrogena soap. I mean, they're everywhere. Stock has really done nothing. You look at Johnson & Johnson, the rump is more of a drug medical device company. It has done very, very little. And, the question again is, do you want to own it? The yield is 3%-ish. Again, you can own, we just talked about Pfizer with a 6% dividend. You could own an Eli Lilly where you get more direct exposure. These are tough. Basically, drug companies I've always found it difficult to invest in because you got to really do your homework, and I leave that to the pros. It's just not a name we own, and I wouldn't want to tell you to sell it because the drug pipeline sounds good. It had a good earnings release. It's got a bit of earnings momentum behind it. This might not be the time to sell it.
Okay, thanks for that question. That's the last question for Market Call today, but don't go away. Lyle Stein will share his top picks right after this break. Join us on Monday on Market Call. Keith Richards will be on the show. He's President and Chief Portfolio Manager at Value Trend Wealth Management. He'll take your questions on technical analysis. He's an expert. That's how he looks at stocks. And if you ever miss an episode of Market Call, check out our daily podcast. You can find it on iHeartRadio and other prominent podcasting platforms. You can also watch full episodes of this program on our YouTube channel. Okay, it's time now for top picks from our guest, Lyle Stein. Number one, and I know this is a stock you've held for a long time and you've liked for a long time, Agnico Eagle Mines, AEM in Toronto. This is your go-to name in the gold sector.
Yeah, and it's the biggest single equity holding that we have in our client portfolios. Though I'm going to say right up front, we did trim it because it got to be way too much of our client portfolios. It's had this great run. It seems to, like the gold price, have kind of stagnated over the last few months. But we look at it as portfolio protection. We want to be in gold-related investments to basically insulate us from what we talked about before, inflation risk and geopolitical concerns. We've had a little bit more clarity on the U.S. to some degree with the big, beautiful bill being passed, but we still have tariff issues to be resolved. We still have the impact of tariff to look at. What is it going to mean for earnings? We talked about that. What is it going to mean for inflation? What is it going to mean for interest rates? What does it mean for the dollar? That's why you want to own gold. You want to own Agnico because, frankly, it's the best gold mining company in the world. It's the second largest, I think, in terms of market cap, up there with Newmont. It's the go-to name, and the world of what we like to call generalist investors haven't really fully turned on to gold. So it's a name I think you just have to have.
Okay. Best gold company in the world, according to Lyle Stein, and the largest single holding in his client portfolios. Number two, we go to the chip sector. AMD is the pick. AMD on the NASDAQ. Go ahead, Lyle.
Advanced Micro Devices. You put up the stock chart. It had a heck of a run, and then it really fell off in 2024 as they missed earnings, and the street didn't like that. How can you miss earnings in the chip sector? Now, it's not NVIDIA, but it's kind of number two to NVIDIA. And I'll never forget a story that a guy whose name you'll remember, K.Y. Ho from ATI Technologies, told me 20 years ago. At the time, NVIDIA and ATI were the competitors for gaming boards on PCs were probably, Windows 365 or not a three, you know what I'm saying? Anyway, the story was every user of a chip has to have a backup company. And the story with AMD today is, to me, quite simple. They are the go-to name if you don't want to own an NVIDIA chip. If you're a Meta Platforms, you're building a database center, you want to have a backup. AMD is it. Market share goes up. Their revenues will go up. The stock is bottomed. Analysts like it. It's a go.
Okay. AMD, one of the big names in the chip sector. Lyle Stein's second top pick on this day. Number three, Vermillion Energy, VET on the TSX. Back we go to the Canadian energy sector.
Exactly. Canadian gas energy. But the interesting angle with Vermilion to us is the fact that they have gas in Europe. Their production coming in Ireland, their production coming out of Germany. They just had a really good discovery in Germany. I don't think the market's fully reflected it in the price. It pays a 5% dividend. Well valued, or well managed, a good tradition of being shareholder friendly, either through dividends, through share buybacks, or for managing their debt well. It's an underappreciated name, and in this kind of market, I don't want to chase the highs. I want to look and ask myself, where is the market missing stocks that haven't moved yet? Vermilion fits.
What, in terms of checking the boxes, what kind of things do you try to avoid when you make an investment in the Canadian energy sector?
Size, I think, makes a difference. I think, again, it's tough as you get down market cap because different well experiences can have different implications. But the most important thing to us is, what do you like in terms of oil versus gas versus drillers? Not really going to talk about drillers. We like gas. So then where do we get gas exposure? We own Vermilion, we own Peyto, and we own, I just had a mental.
Okay.
The big one, Tourmaline. Sorry. Right. We own 3 of the 4 biggest gas-levered stocks in Canada. We're looking for value. We want to make sure that we're getting them at a reasonable price, but all of them are trading at 5-6 times cash flow, if not less. So that's what we do.
So you like gas. Gas can be volatile, much more volatile than oil in the short term, but longer term, you think gas prices are going up?
Yeah, and in particularly in Canada, with the opening up of the pipeline to the West Coast, you look at that AECO differential. between Henry Hub, Canada Gas, that has been high. If you look at forecasts for next year, it's come down quite a bit. So the Canadian producers now not just have only one market called the U.S., they have a second. That will, in fact, keep gas prices that the companies realize much better. So that is kind of a catalyst to the Canadian gas names that you're not going to find in the North American or global games.
The Prime Minister has spoken over and over again about building big projects, and he sounds certainly open to the idea of pipelines and more export terminals. We've got one going right now, LNG Canada. There's an expansion phase there. We talked about Cedar LNG with another guest today. That's a floating platform type of thing. How important is it to the country, do you think, that we get more of this natural gas to foreign markets, and what are the stock market consequences of that if we do?
Well, hallelujah. I mean, it's taken way too long. I mean, this is our best asset. We look at Canada, we ask ourselves, how do we participate in energy and how do we participate in water? Those are our two greatest gifts. Anyway, we won't talk about water, but the best part of getting gas to market is these pipelines will open up Asia, maybe even they'll open up Europe. I mean, the last Prime Minister rejected us selling our gas, and this is what we do well. We have to support this. The revenues that come out support it. And with that AECO price now going up, it's a great time to be in the gas patch. I think it's good for Canada.
Okay, that's it now for top picks. The show's not over yet, however. This happens to be my last show ever here on the channel, as I guess is clear by now. To mark the occasion, we're going to look back at some of my memorable moments and be joined by a special guest. My great, great friend Andrew Bell will be here in just a moment. Well, welcome back to Market Call. This is my last show on BNN Bloomberg, and to mark the occasion, I've been flattered by all the attention, and thank you to all the viewers who have sent emails as well. To mark the occasion, I couldn't be more happy to be joined by Andrew Bell, who's a veteran of this station and one of my dear, dear friends as well.
Paul,
Andy,
thank you very much indeed. It's a bittersweet day for us, actually. We've prepared this look back at your career here. Let's roll it.
Okay, let's do that.
When Paul Bagnall walks into work, it's with a stride of confidence. That's decades in the making.
This has been my life for 24 years. Journalism has been my life for 40 years. Hi there, and welcome to The Street here on BNN Bloomberg. I'm Paul Bagnall. Thank you for joining us this morning.
Paul has a distinctive broadcast quality, and for his co-workers, it usually boils down to two words.
Unflappable, reliable.
He's unflappable.
But that's not how things started. The year was 2001. BNN Bloomberg was called ROB-TV. Gas was 66 cents a litre. The average house was 162,000. And so was Paul's blood pressure.
I remember my heart was going thumpa, 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 and there was a sense of panic in me when the red light came on.
A great deal of confusion today, throughout the day, that only seemed to deepen on the state of One Liberty Plaza.
I was so nervous that it was hard to keep my thoughts organized.
Paul had already spent 15 years as a print reporter, so there was never any question about his business journalism. However,
the station manager made it clear to me more than once that he wanted to see more animation out of me.
And so he got a coach.
That talent coach urged me to modulate my voice a little more, to use my hands and things like that. I like to think that, well, I'm no Andrew Bell, personality-wise. I like to think that I became more natural and more of a TV professional.
Paul is pure class. You knew that you'd never get an off-color remark on air or anything misleading, and he was always helpful. It was always such a pleasure to work with him.
He brings his real self to work, and it's been his real self that viewers have seen and connected with all of these years.
My very first show, Market Call, which is a call-in show, noon Eastern time, it was the winter, there was a storm, the guest didn't show up. We are joined by the lovely Paul Bagnall, who is at the desk.
And welcome to BNN Bloomberg.
What a show to begin with, of course. So I was sitting there, new to the whole gig, and Paul jumped in as a temporary guest on the show. He literally saved me from making a fool of myself on the first day. And again, he is just that person.
You raised a really good point, Patty. Are you going to go out and buy the phone?
First of all, my name's Paul.
Oh, Patty!
That's okay. That's fine.
Paul has a dry sense of humor. I remember once we were discussing Bono of U2, the rock star. We're both from Dublin. And Paul said, you know, you're a bit like Bono. No, he's much more successful than you.
Well, TV anchors and personalities can awful stumble over words in their scripts. Tell me about it.
It's going to be hard to get used to not having Paul around. Welcome to the street. I'm Paul. I'm Andrew Bell in for Paul Bagnall this week. I don't think we've merged our personalities yet.
I'll miss many people here. I know that Andrew Bell and I are likely stuck with each other for life. He's become a lifelong friend, and we spend a fair bit of time together out of the office.
And everyone who knows Paul knows what he likes to do out of the office.
Baseball,
the Blue Jays.
He's a sports guy.
I'm a big sports fan. All the sports interviews have come my way over the years.
He has an encyclopedic knowledge of jazz and music in general, but Bob Dylan is his greatest love.
Apparently he's been to like, I don't know how many concerts.
I've seen Dylan perform close to 80 times in concert. I go to a lot of concerts myself. I don't ever want to know the amount of money that I've spent on concert tickets and sports tickets in my life.
Okay, Paul, thanks very much. Paul Bagnall in our newsroom.
Over his 9,240 days at BNN, Paul has mentored dozens of colleagues, navigated breaking news, and he always showed up prepared and ready to go. And now he's ready to go on to a new chapter, but again with some plans.
I'd like to work on my French language skills. I've never have been in a book club, so I'd love to join a book club if that's possible. I play guitar, not very well, but I'm looking forward to getting back to guitar practice, things like that. But I think in the initial going, I'm just going to relax.
Paul, thank you very much for more than 2 decades of working together. Every day has been a pleasure. I never once, and I really mean this, in more than 20 years, thinking, wow, why did Paul do that?
Paul, it's been incredible to work alongside you for so many years, and we wish you all the best in your next chapter. We're going to miss you, and we're so excited for you. Congratulations.
Have a great retirement. We wish you well, and come back anytime.
I just want to wish you all the best in this next chapter of yours, and I hope that it is just as fulfilling and rewarding as the last one has been.
Wow, that was something else. Thank you so much to everybody, Derek Miller in particular, who put that together. Andy, it's been great to work with.
It really has. And I mean, this is an industry that it's like trapeze artists. You have to trust each other. And I always felt that I could trust you when I was on set with you, Paul. Just, you had another very good dry humor line a few years ago. We were discussing our physiques. And Paul said, you know, I used to be a European abdominal model. In any case, Paul, it's been so much fun. Okay. Lyle, over to you.
Yeah, well, let me first of all say, Lyle, thanks a ton for doing this. You are one of the people that's become a personal friend of mine. We met here, right, basically at this desk, and we forged a friendship that way. On behalf of viewers, you know, this channel's all about the viewers. They have benefited in a huge way from your expertise. So thanks, and I will see you before too long.
Well, Paul, it's an honor for me to be here. Really, sharing this last market call with you, it meant so much to me. And I don't know how many shows we did over the years, definitely not 9,000, but I will always remember you as the consummate television journalist. You're always creative, you're inquisitive, you are the true professional. But I also got 2 other things for you. For all the guests, the Bay Street pros, the industry pundits, the analysts that you've had on, thank you for making this show easy to appear on and just so kind to us. But most of all, for those countless viewers that you've had over the years, those people who listen, you have been an unbelievably faithful servant to them. And that is wonderful. So for them, I want to thank you as well. But all I can say now is well done, good friend.
Wow, thank you a great deal. Well, it's time now for me to say goodbye. I'm so grateful for the kind things that people have said about me lately, particularly our viewers, the people we work so hard to serve every day. If you sent me a message on LinkedIn or on X over the past couple of weeks, I'll reply to you before too long. It's been quite a time at BNN Bloomberg these past 24 years. We've all been through a lot. The implosion of Nortel Networks, the attacks on September the 11th, 2001, Ottawa's decision to tax income trusts, the collapse of Lehman Brothers and the financial crisis of 2007 and 2008, the introduction of the iPhone in 2007, the IPO of Facebook in 2012, and some of the longest bull markets in history. Through all of this, our team at BNN Bloomberg has worked as hard as we possibly can to report the news as quickly and as accurately as we can, and more importantly, to explain those events as best we can with our expert guests, people just like Lyle Stein. It's been an honor to be a part of that team, and I want to thank everybody here at BNN Bloomberg for being such great colleagues all of these years. I'm going to single out one person. Ryan Miller has been in my ear as a show producer for many, many years now. He's in the control room producing this show right now. He's a cool-headed professional with great television skills. Ryan, thank you so much for being such a selfless professional. You've made it easy for me to be on the anchor desk all these years. Most of all, I want to thank you, the viewers. You are what makes BNN Bloomberg. Your keen interest in business news and your insatiable appetite to learn more each day. Rest assured that BNN Bloomberg will continue to serve you for many years to come. That's it for me. Thank you so much for watching, and goodbye.
That was great. Nice shout out to Ryan. Yeah.
Thanks, everybody.
Oh, the cake. Yeah.
Yeah.
Bring the cake in. Yeah.